stare at the current runaway inflation, the Central Bank of Kenya Monetary Policy Committee maintained the lending rate at 7.5%. And they maintained that it was mainly informed by the worldwide rising inflation. In their brief, the Monetary Policy Committee is upbeat that some of the issues influencing the world economy got correct. CBK analyzes the key issues that led to the MPC's stance on the current CBR at a time when Kenyans have to make do with little as the country fights the current inflation numbers.
The MPC, while retaining CRB at 7.5, indicated that high inflation across the world brought by the Russia-Ukraine crisis as well as the high fuel prices informed their decision. Dr. Njoroge dismissed claims that Kenya had a dollar deficit, adding that claims by a section of business community in Kenya that they were struggling to get dollars was unsustainable as Kenya's import covers is still within the legal limit.
This has been going on, okay. I think to be honest, this story was overblown in the past about the risk-based pricing. And we have been working with the banks, going back and forth with them. And I think more than a half of banks have already had their let's say, their risk-based models approved, or should we say, signed off with us. The others, we are at different levels of completeness. But again, we know that what we need to insist on is making sure that the models are realistic. They are not just some sort of a class project, and so we are specific about that. But I think the issues that were raised before were somewhat overblown.
Issues on the banking industry. Njoroge indicated that the regulator had already approved more than half of the local commercial banks' risk-based models, adding that this was going to further unlock credit access to the mass market and MSME sector.
Month, the price of unga obviously was lowered to 100 shillings per 2 kilogram pack. Right. The point is also that when KNBS went to survey the prices as they do, which will be reported tomorrow, not all, not all stores had already adjusted to the new price.
However, when put on the spot to explain how credit access to the MSME sector was going to grow on the increasing appetite for T-bills from banks, which stands on a 5-year high, Dr. Njoroge, he took a soft landing by saying that studies on this area needed to be done to ascertain the impact of competition for credit from the government. This has been a long-standing concern by economic analysts. Similarly, Dr. Njoroge said that it was not clear yet when to expect the impact of unga and fuel subsidy, that maintained he was hopeful that by the time they end, the world economic on food and fuel shall have corrected. Kenyans are now borrowing at 15% interest rate. This will likely continue for the next 2 months unless MPC meets again. CBK reporting for